In the GTA's housing market recently, canceled listings across the GTA spiked by 643%. This is due to uncertainty on where prices may be headed.
And also Canada's largest bank, RBC, with stark warnings the housing market might enter a correction unseen in nearly 40 years. So let's break down the numbers with Robert Van Ryan, broker of record at strata.ca. Robert, good morning to you. So we have two things here. We have these canceled listings that have jumped 643%, and also RBC saying that we are heading for an unprecedented historic housing correction. What should buyers and sellers take away from this data?
Well, I think the terminated listings really represents the degree to which sellers are still being unrealistic with their understanding of the market conditions and their listing strategy. We are seeing now that in July, the number of terminated listings is down for the first time in months, about 15%. So it suggests that sellers are getting the memo, they're understanding that they need to readjust. It's certainly a more favorable market for buyers. The first quarter of this year was an absolute nightmare for any buyer in the market looking for anything under about $800,000. So we're now in a more mild buyer's market. Nothing like the seller's market we were in before as a comparison. In the first quarter of this year, properties were selling about 20% above the list price. We haven't seen anything like that. Well, I don't remember the last time we saw anything like that. But buyers can actually negotiate now, and buyers are, as an average in the GTA, buying at about 1% below the list price.
It's interesting, Robert, even just in my own neighborhood, I see, for sale signs that used to be up and down, almost in a heartbeat. It was up, it was sold so quickly. Those listings seem to be lingering a little bit longer these days. And there's always this psychology in real estate, behind this whole, whether you're a buyer or a seller. So I've heard what you're saying about the sellers. What should buyers be doing? What should the strategy be now if you're looking at buying property, whether it's for your own home or maybe for investment reasons in a market the way it is right now?
My honest advice to any investors right now in the market is to be a little more skeptical of the GTA as a whole, but to be a little more bullish on the downtown market. So there are some signals in the downtown core that we may be at bottom. The number of total listings in the market is actually declining in July for the first time since June. Where we kind of hit a peak of a bit over 1,500 listings. So investors in the downtown core may want to consider buying now in the GTA and areas where there are less work opportunities, where there's lower demand. They maybe be a little more skeptical and maybe sit on the sidelines a bit. We still have more interest rates hikes to come, and that's certainly going to soften the market further. I wouldn't say this is an outright collapse of the market, though. In the GTA, we are down 12% from the peak of the market in February and March, and that's a pretty dramatic decline in such a short period of time. But we're still up about 4% year over year. So if I were a buyer, sales are probably going to decline about 20–25%. But many buyers have to buy for one reason or another, to relocate for work, life events, marriage, divorce. There are a number of reasons. Does that answer your question, or does that
I think
make
it
sense?
does. Yeah, absolutely.
Yeah, okay, very interesting. Robert Van Ryan, broker of record at strata.ca. Appreciate your time this morning.
Thanks, Robert.
Thank you.
Thank you.